Hey YouTube, welcome back to My Financial Focus. In this video, I'm going to be doing a stock analysis of Meta platforms. Recently, Meta announced earnings and we can see that their share price has fallen from about $324 to nearly $224 in literally just about a week and a half. So their share price has fallen by over $100, which is pretty substantial considering that their share price is only $220 something. So I'm just going to break this video up into three parts. First and foremost, I'm going to talk about their business and figure out what their primary operating segments are, as well as what the costs are of operating their business. I'm going to go into their financial statements in the second part to get a better sense of the financial health of the business. And then lastly, I'm going to end the video off by doing a discounted cash flow analysis of Meta platforms to figure out what the intrinsic value per share of their stock is, so that we could figure out if at the current share price it presents a decent buying opportunity based on different assumptions like their future free cash flows and growth rates and things like that. So thanks in advance for leaving a like, and let's get right into the video. So the first page that I'm going to go into in their annual report is page 7. And right here on page 7, they give a quick look into their business overview, where they primarily talk about their two main business segments, which are their family of apps operating segment and then their reality labs operating segment. With their family of apps, it's made up primarily of their different really popular apps like Facebook, Instagram, Messenger, and WhatsApp. And then with their reality labs operating segment, they basically sell and manufacture virtual reality hardware, software, and content. For their family of apps section, a lot of people probably already know this, but the main way that they make revenues is by running ads on their platforms. Businesses are able to just spend a certain amount of money to run marketing campaigns and place ads on their different social media platforms. And that's how they're able to generate revenue. And these different businesses are able to target different users and customers based on things like age, gender, location, interests, and behaviors. And then for the Reality Labs section, it's one of their newer sections that they're trying to grow, which has been growing pretty substantially, especially in 2021, which I'll get into in the financial statements in a little bit here. But it's pretty self-explanatory. They really only make money in this section at the moment by selling hardware, software, and virtual reality content. Then right underneath that, they talk about their competition, and Facebook or Meta platforms is up against some pretty steep competition in this technological sector that they're competing in. They compete with some of the bigger businesses in the market like Alphabet, which is otherwise known as Google or YouTube. And they also compete with Amazon, Apple, TikTok, Microsoft, Snapchat, Tencent, and Twitter. So they're definitely up against some pretty steep competition. And they're trying to differentiate themselves with their free and also paid advertising opportunities that they offer to different businesses. And the next page I'm going to skip to is page 53. And right here we can see the amount of active users that Meta has on their different social media platforms and their family of apps operating segment. Right here they talk about their daily active people on their social media platforms, and we can see that that's been growing pretty substantially from December 31st, 2019, when it was at about 2.2 billion daily users. And then in December 31st, 2021, when it was at 2.8 billion users. And then right down here, we see their monthly active users, which has also been increasing from about 2.8 in 2019 and then 3.5 in 2021. And then right here, the last chart that I'm going to look into is their average revenue per person, which is pretty interesting. We can see that they make about what looks to be $21 billion, I guess, per person, average revenue per person. And then that's increased to about $33 billion in December 31st, 2021. Or my mistake, so it's $7 per person and then up to $9 per person for a total of about 21 billion up to $33 billion in ad revenue, as we can see right here. And so the next thing that I want to go into is their financial statements. And we can see the first financial statement right here, which is their balance sheet on page 79, which gives us a good look at a quick little snapshot of their financial position at the end of 2021. And we can see that their cash and cash equivalents has decreased from about $17 billion to $16 billion in 2021. Their marketable securities has also decreased, and we can see their total current assets has decreased from about $75 billion in 2020 to $66 billion in 2021. But their total assets, which includes their current assets and their long-term assets, has increased from about $159 billion in 2020 to $165 billion in 2021. And then right here we can see their total liabilities, which have increased from about $31 billion to $41 billion. And then their total stockholders' equity has decreased from about $128 billion to $124 billion. So basically, this could be a good thing or a bad thing. It could be a good thing in that the people who were holding onto shares of Meta platforms when the stockholders' equity made up a larger portion of the financing for their business, now that they've repurchased more shares from what it looks like and their stockholders' equity has decreased, the ownership percentage that the previous shareholders had in the past has actually increased now that there's less stockholders' equity, but they basically own the same percentage of the business as they did before. So their effective ownership has increased in that case. And the next financial statement that I want to look at is the income statement. And this is pretty interesting. We can see that their total revenues have been increasing extremely drastically over the last 3 years, from about $70 billion in 2019 to $120 billion in 2021. Their advertising revenues in 2021 actually increased by about 37%, and their advertising profits increased by about 45%, and that mainly came primarily due to more ads that were played due to increased user traffic, as we saw from the previous charts that I showed before. And also their 2021 Reality Labs revenue increased by about 100%, so it nearly doubled in 2021 as opposed to 2020. But that segment of their business is currently operating at a loss, and their Reality Labs profit from 2020 to 2021 actually decreased by about 54%. And so the increase in the revenue came from more hardware products being sold, but because of the increased research and development costs and the fact that they are currently operating at a loss in that segment of their business resulted in a net loss for 2021. Their cost of revenue, a lot of people might not really understand like why a business like Meta Platforms would even have revenue costs to begin with, because they're not really manufacturing or selling any products necessarily. They're just having people run ads on their platform. But they do incur revenue costs. The primary revenue cost for Meta is the cost of running their data centers and their technical infrastructure. And so they accrue things like depreciation on their servers, their buildings, their network infrastructure, and they also incur a lot of bandwidth costs because they have to host a pretty large server in order to host the upwards of 2 to 3 billion users that they have per month. Their research and development costs consist primarily of their costs for their employees in their engineering teams and things like that, who are developing new products and improving existing products. We can see that came out to be about $24 billion in 2021. Then their marketing and sales costs are mainly just payroll for employees that are engaged in their content review section, as well as different customer service, sales, marketing functions. And then for the general and administrative costs, which came out to be about $9.8 billion in 2021, that primarily consists of legal related costs, so people who are on their finance and human resources teams, as well as different fines and settlements that they accrued in 2021. And then right here we can see their net income, which increased from about $29 billion in 2020 to almost $40 billion in 2021. So that's about a 33% increase on their net income from 2020 to 2021. And then the last financial statement that I want to look at is their statement of cash flows, which we can see right here on page 83. And we can see that their net cash provided by operating activities increased from about $38 billion to $57 billion in 2021. They invested about $7.5 billion in 2021, and then from their financing activities, they repurchased almost $50 billion of their common stock. So that's definitely probably one of the reasons why we saw earlier in their balance sheet that their stockholders' equity decreased, which, as I pointed out before, has probably been very beneficial to the previous shareholders because their effective ownership of the business is increasing as the stockholders' equity decreases. All right, so the next thing that I want to do is do the discounted cash flow analysis, which is going to be the final part of this video. And I'm just going to start by getting the growth rate for years 1 through 5, which I got from Yahoo Finance right here. It comes out to be about 21.35%. For years 6 through 10, I'm going to be conservative and just cut the growth rate in half. For the year 1 free cash flow, I got that from TradingView, and we can see that came out to be about $39.12 billion. For the net cash minus net debt, I got that from Yahoo Finance as well. We can see their total cash is $48 billion minus their total debt of $14.45 billion. Stock ticker is still FB, and then their shares outstanding is right here. It came out to be about 2.31 billion shares. And so after we plug those values in, we can see the intrinsic value per share based on these estimated growth rates and the current cash on their balance sheet comes out to be about $451 per share with a 50% margin of safety of about $225 per share. So if we wanted to buy into Facebook stock at a 50% margin of safety relative to their estimated intrinsic value, we would ideally want to try and buy it at about $220 per share. And at the moment, their share price is in fact trading at about $220 to $230 per share. So if the growth rates from the discounted cash flow model are accurate, which they may not be because they are assumptions and there's a lot of things that could happen in the future with the economy and especially in the technology sector. But if they are true, then that means that Meta Platforms does present a pretty attractive buying opportunity at the current share price as a result of the decrease in the share price as a result of the earnings announcement that recently showed up. But I would love to know what everybody who's watching this video thinks about Meta Platforms. Is it a good buying opportunity right now? And what do the growth prospects look like for Meta going into the future? Leave a like on the video, subscribe, comment, all that good stuff, and I'll see everybody in the next one.